to you by Nairametrics. My name is Ugodre, and we do this every Monday, 8 to 8:30. How was your weekend? Hope you had a nice weekend. I did, but that traffic this weekend, if I start to rain curses, it's just not good for you Monday morning. You know, especially Monday morning where we're here to set the tone for how your financial week will look like. So got a lot of things to discuss today. I'm riding solo, so it's just you and I, and gonna be drilling out a number of things. Today I want to focus on insurance stocks. So I have 4 insurance stocks on my radar that I want to talk about today. So if you're one of those people who are looking for insurance stocks to perhaps invest in, I just want to know a little bit more about insurance stocks. I've got this 4 stocks that have popped on my radar, and so I'm going to just give a little bit of insight about those stocks, but just enough for you, just enough to whet your appetite. But before we start, I want to quickly go into some macro numbers that came out last week. It was a pretty busy week. Of course, we had GDP numbers out, and we also had the MPC meeting, which is the Monetary Policy Committee meeting that happened last week. I think it was on Monday, Tuesday. And so the MPC came out and voted to increase interest rates by a whopping 150 basis point. I mean, last week I kind of was thinking it was going to be between 50 basis points and 100 basis points. By the way, when they say 100 basis points, they're basically saying 1%. So when they say 50 basis point is 0.5%. So that's just financial lingua. So it's 150 basis point, that's 1.5%. Like typically or historically, MPR rates are usually raised at maybe 25 basis points, 50 basis points. But lately, over the last year or so, in fact, since this year, we've seen over 750, I think, basis point increase in the Monetary Policy Committee, monetary policy rate. So today, the benchmark MPR for Nigeria is 26.25%. That is unprecedented. And if you're wondering, what does this mean and how does this affect rice and beans? Essentially, the lowest the CBN is saying banks should lend money to you is 26.25%. And so banks tend to add a premium to that number. So it's MPR plus something. So usually plus 5%, plus 10%, plus 8%. All depends on how the bank appraises the risk of lending money to you. And so with MPR at 26.25%, you're not going to expect to see commercial loans less than 30% or 32% or 35% in some cases. I've heard 36, 37%. I've even heard 40% for lending. It's just incredible. So let me just put it into context. If you borrow today and your interest rate is even 30%, it means that in 3 years, you're paying double that loan. You're paying the exact principal amount you borrowed in interest. That's just mad. So how are you going to be able to cover that cost? But the message is clear from the central bank, and I think I got to put it out. I put it up on my Twitter handle last week. If you are not following me, you can check me on Twitter at Ugodre. I did mention that the message here is you better cut back on borrowing. The central bank is saying there's just so much money out there, and we're trying to cut back money supply, and so reduce your borrowing. And when you do reduce borrowing, that has an effect on a country's ability to grow, isn't it? Like economic growth, because then companies can't really deploy cash or capital into projects or into investments that can yield revenue, and even hiring starts to slow down and all sorts of things. We haven't seen job numbers in a while, but that basically is the message the central bank is saying out. And they were clear. They said they're trying to fight inflation, which is basically running away at the moment. And so that's why they're raising rates. But even though rates are up, it's still negative because inflation is over 30%. And so they're still chasing inflation anyway. They did claim that they saw some gains with month-on-month inflation growing slower than previous month. And so they think that maybe their policy is working. But there's some people who think it's not just enough to keep raising rates. I mean, you've got to be able to, balance it with some fiscal measures. And the CBN also did admit that much, that that's the only tool they have, monetary policy. And this CBN is very different from the Emefiele CBN that use not just monetary policy but development finance, which is the intervention funds, which is one of the things that has landed demand in courts at the moment, that was even locked up for some time. And so this current CBN doesn't want to toe that line because it can be a bit excessive sometimes. And so they're saying, look, this is the only thing we can do. We can only just raise MPR, and so let the fiscal side come and do their job, because we've got security issues in this country. We've got logistics issues in this country. We even got we even have challenges with growing food and increasing yields, crop yields. So these are all issues that the central bank can't fix, and they all add up to the challenges of inflation. And so that is why this is such a huge conundrum, because for those of us who think that, look, you just can't keep raising rates without having any real focus or any real target in terms of inflation. And so to the CBN, what is your inflation target? Like, do you want to see inflation at 25% or 10% or whatever? If yes, when? So let people even know what the goal is, because right now it doesn't look like we've got a goal. There was one on the MTEF, but that's unrealistic, because the MTEF has a medium-term expenditure framework, which is usually the template for our 2-year budget. Is a little bit outdated with the data. So nobody really knows for sure what the ideal inflation target is. Some also say that the reason why they're doing this is because they want to bring down the exchange rate. They want to sort of stabilize the exchange rate. And so by raising rates, then people won't need to move a lot of their naira to dollars. Kind of makes sense, because the same way it's expensive to borrow, it's lucrative to invest in treasury bills and Umo bills and things like that. Someone sent me a message recently and said, look, I have also X amount of money. What do I invest? Like, treasury bills is like 22, 23, 24% in true yield. So that's like, imagine, just like if you just give the government 1 million, you get 240,000. If you give them 10 million, you get 2.4 million. You get 100 million, 24 million. You get 1 billion, 240 million without doing anything. Kind of looks like the rich gets richer, isn't it? So, but that's really the economy we find ourselves in, and the central bank thinks that if they by offering this sort of rate, then a lot of less naira will chase dollars, and maybe we can achieve some kind of stable exchange rate, and then they could even attract foreign investors and they can come in. So that's their game plan. It's an expensive one, but we're here to see how it pans out. And so the GDP numbers was also one of the big macros that was out last week, and according to the MBS, Nigeria's GDP for the first quarter of the year grew by 2.98%, which is slightly lower than the 3.4% recorded in the immediate past quarter, but higher than 2.3% that was 2.3% that was recorded a year ago, first quarter. So a bit of improvement on a year-on-year basis, but seems like we've gone back quarter on quarter. So starting the year on a better note, but not as good as how we ended it last year. GDP growth is very important. I mean, at 2.9%, that's pretty tepid for the economy. So if your GDP is at real GDP growth is at 2.9%, then it kind of, and your inflation rate is running away at over 30%. It kind of looks like we're neck deep in a stagflation. Stagflation is just a word for stagnant economic growth and inflation all in the same bucket, and we've just been growing at less than 3% on an average over the last 2 years or thereabouts. So not a lot of movement there, and that's why things just don't seem to be working right in the economy at the moment. So those are the big macros last week. We do a lot of digest and deep dive into these macros on Nairametrics Twitter Spaces. If you really want to, listen to a lot more, that those spaces go for more than an hour. We can do that on radio. So on Twitter Spaces, you can always go there at Nairametrics Tuesdays and Thursdays, where we tend to break down a lot of this thing. And we'll have different people with different comments. You can even weigh in as well. I mean, drop your own comments in there. It's usually Tuesday, Thursdays, 6 p.m. on Twitter. Just search for Nairametrics and you would find, the spaces there. It's very, very engaging, and we tend to take on different topics. All right, so we move quickly into the markets. That's what this show is about at the end of the day. And it's always about the markets, stock market especially. And another crazy week last week. The NGX All-Share Index fell again by 0.5% to close the week at 97,612 points. If you're an ardent listener of the show, you know that there was a time this market was over 100,000 and we're celebrating it. But hey, we're now at 97,612, and the market capitalization is just 55 trillion thereabouts. So still not still within that 50 plus trillion, but looks like the market is slowing down drastically. And if you look at the entire index itself, the all-share index is now at 30.5% year to date. If it goes on like this, if we have another bad week, then we're likely going to see the all-share index drop below 30%. It's already negative inflation. It was always higher than inflation before, but the 30.5% is now negative inflation. Quarter to date, 6% loss. So that gives you an idea of how bad this quarter has been for stocks. April, May has just been bad. In fact, May has been worse. May, month to date, all-share index is down 0.6%. I think April is actually worse, actually. And so most of the indexes have lost value. The consumer goods index down 21%. The banking index, that's the major driver, that index is down 28% quarter to date. So it's been a bad week for stocks. Nevertheless, we still had gainers and we had losers, and top the gainers was Beggar Paints. There was an article wrote about them on Metrics last week, comparing their revenues and their cost structure with their rival CAP PLC. So Beggar Paints did a 20.6% pop last week. So if you invested in Beggar Paints, you'll probably be up 20.6%. Another one that caught my attention was Nestle. Nestle finally hit 900 naira. They've been below that price for about a year now or so, I think. And they closed the week strong at 900 naira. They gained 9%. So you probably want to watch out for Nestle. Looks like one stock I might put on my radar. It's going to be on my radar. I'm going to watch what's happening in that zone. Nestle can be as high as 1213. We've seen Nestle touch those kind of numbers before. So that's one I will look at. Julius Berger was also right there. It did grow just a little bit, 7%, but enough to catch my attention as well. On the loser side, where not notable companies, but there are some notable ones that were there. The top two were notable, that's what I meant. But then I saw Transcorp down 12%. I'm seeing UBA down 19 point. Down to 19 naira 2 kobo, down 12%, and that actually is UBA's lowest price this year. Doesn't that just sound like that's an opportunity out there? I don't know, but it looks like that to me. That 19 naira 20 kobo. FBN Holdings as well, 20 naira 45 kobo, almost close to his year low. So the banks, EcoBank also dropped to 21 naira 65 kobo, lost 10%. So the banking stocks are really taking a beating, and who knows when is this going to end? Just taking a huge bit, but you want to keep your eye on banking stocks as things unfold. Of course, there were price adjustments during the week, and Micure paid dividends, 15 kobo if you have shares in Micure. You want to check if you got your lot already. And May and Baker, two of the healthcare related stocks on the exchange, also paid. May and Baker paid 30 kobo, twice more than Micure for the week. So that's the first segment of the show. I'm going to be back with the second segment. I'm going to be talking about the stocks on my radar, insurance stocks on the watch list.
You're listening to Follow the Money with Ugodre.
All right, we're back on the second segment. But before I dive into the insurance stocks, something happened last week. There was an event that happened. UBA marked its 75th birthday last week, and I was one of those invited to that event. Interesting event, and the management they were all there, and we're happy to take a lot of questions, and they took my question. Of course, I had to ask this question for you guys, my listeners. I asked the CEO directly, when is UBA going to hit 100 naira per share? You could see the whole, everyone was like, ooh, and he did respond and said, look, we will. I'm very confident we will. Because I asked him, in your era, are you going to hit 100 naira per share? Because he just became CEO, I think, a year ago. So I want to put him on the spot, and his response was emphatic. Look, we are going to hit, I'm confident we will get there. So, fingers crossed, but you do have a long way to go, sir. At 19 naira, from 19 naira to 100 naira, that is going to be astonishing. That's always like 30%. But you know what? EB has done it before. They did about 200 or so percent last year. So, I mean, you can't count them out. So, put out your watch list as well, because we're going to be tracking that stock from now at least to the next year or two, and let's see if it's likely going to hit that number. It has hit 30 naira before, I think, it's sometime this year, so it's not unachievable, probably achievable, right? Okay, so we go right into insurance stocks for on my radar. But before we go, there's something that I'm sure if you're, an investor in the exchange, you notice that most of the major insurance companies haven't released their audited account yet. This is May. We're like in the last week of May, and their audited accounts are not out. What you would see is their interim financial reports, and so that kind of makes investing in insurance stocks a little bit, worrisome for some investors who like to see numbers before they make decisions. And the reason why is there's this IFRS 17 position, International Financial Reporting Standard 17 position accounting standard, that requires a change in the way they disclose their contracts, insurance contracts, and how that affects their profits. That's a huge change from what I gather, and that is why most of their results are being delayed. So the stocks I'm going to mention now all have that issue as well. And so if you are wondering why you haven't seen insurance stocks publish their financial statements, that's why most of them have to wait for regulatory approval for the changes, for the changes based on IFRS 17 that have occurred in their books. And so I don't know why it's taking this long, because, we're like already hitting mid-year, and Q1 is done. Q1 is like completely done. Q2 just has 1 month to go. We're just talking about full year results, December results. So I don't know if there's anybody under pressure here, but I kind of think that it's about time we start to put regulators under pressure. You can't just keep results for this long. This is May. How do you just keep company results this long? You have investors out there who have investment stake in this company and companies, and they don't even know what the final numbers will look like. So it's a boring situation, and I hope that regulators who may be listening might do something quickly about this. Whoever is in charge of this, I don't think you're under pressure. You need to be under pressure so that we can have these numbers out. You just can't keep results delayed this long. No, doesn't happen anywhere else. Why only in Nigeria? Banks also, some of the banks took long for their results to be out. Shouldn't be happening, should it? Okay, so the first stock on my radar is ICO Insurance, one of the oldest insurance stocks in Nigeria. Current share price is about 98 kobo, and it's trading at the price to earnings ratio of 4 times. 4.4 times, 4.2 times. And if you're wondering what that is, the price to earnings ratio is the share price of a stock divided by the earnings per share. So the higher that number, the more expensive the stock is. The closer it is to 1, the cheaper that stock is. Excuse me. I explained that on the show before. So when you see price to earnings ratio of 12, 14, 15, 18, 20, 25, they tend to be expensive stocks. But it could also mean that those are growth stocks, because investors think that these stocks always grow their profits, so they assign high multiples to their earnings. And so when they are low like this, investors don't anticipate a lot of growth, and so the multiples are usually pretty low. But then it could also be a different issue, which is more synonymous with Nigeria, where investors really don't care. They don't really care what the value, what the multiples are, because they don't see the stocks in that way. They just see it as one of those trading tools, and it kind of looks like what might be wrong with ICO here. Earnings per share at 4.2x, so that's pretty low. But you have to also always compare price to earnings ratio with the price to earnings ratio with similar stocks in their industry. So if, for example, ICO is at 4 times and its peers are 2 times, then it's twice more expensive than its peers. You see the difference? But if you compare ICO to maybe say Dangote Cement, that is probably doing 8-9 times earnings, that's not a good comparison. So you think our ICO looks cheap because it's 4 times compared to Dangote at 9. So that's how these things work. So follow me. So price high this year is 1 naira 54 kobo. So ICO has been as high as 1 naira 54 kobo and as low as 88 kobo. So it's kind of like below its price high, suggesting that there might just be an upside somewhere. Like I mentioned, the audited accounts are now out, but if you go by the interim account that we saw, the company said it might do 22 kobo per share in earnings per share, and that kind of gives me an upside of 20-30% somewhere in there in the stock, and so at 98 kobo, this stock probably has 20% upside. Hey, this is not an investment advice. I think I should have said that earlier. This is just my opinion. So if you're going to make any decision about what stocks to invest in, DYOR. DYOR is do your own research, in case you don't know. So always do your own research. Always do your own research. My job is just to speak to the stocks and just sort of point you to some direction, but you got to always do your own research. And so I think that there's a 20-30% upside somewhere in here in the stock, but we also want to see their results. So that should give us a bit more confidence about, these numbers. So ICO, good stock, old company, has been there like forever. They had a lot of restructuring over the years. They had their challenges, but they seem to be getting out of the woods. And even looking at their profitability numbers over the years, I have this sheet where I have, profits of some of these companies for years. And ICO hasn't really been, that bad more recently. They seem to have been, growing, albeit maybe not sort of growth that you want. For example, in 2018, their profits was 3 billion, 2019, 5.7 billion, 2020, 4.9 billion, 2021, 2.5 billion, 2022, 4%. Not a lot of, for 2022, 4.6 billion. So not a lot of consistency in terms of their growth. But they still deliver profit and seem to have been paying dividend as well. So that is for ICO. So if that is a stock that you find interesting, you might want to check them out as well and see if maybe it also falls into your radar. It does fall into my radar. The next stock is one of my favorite insurance stocks, well-run company, like the way that you're set up. It used to be called, it's evolved over the years, by the way, from I think it used to be called Mansard or so, and then GT Assurance, and then AXA acquired it, and it's AXA Mansard. Solid board, solid management team. Current share price, I think, is about 5 naira per share. Price to earnings ratio 3.3, so you can see it's lower than ICO. It's been as high as 6 naira. Earnings per share 22 kobo. Audited account not yet out. Last year they did pay, I think, 42 kobo or so in dividend. I hope those numbers are correct. In terms of interim profit, they said we're going to make 4 billion this year, almost more than 5 times, about 436%. Compared to what they did last year, which was about 3.69 billion. So looks like if the interim result ends up being close to what the audited accounts is, looks like that's one company that's going to be giving you a very solid upside, solid numbers when it's out. So upside for me on the stock is between 20 to 30%. That's what I kind of see. What that means essentially is that at the current price of 5 naira, I kind of see the stock going to about 8 naira or so between now and the end of the year. So that is like a 20 to 30% upside for AXA Mansard. AXA Mansard, like I mentioned, is a well-run company since it got listed and since it even got acquired. We've seen the numbers grow, profits as well, 2.4 billion in 2018, 2019, 2.9 billion, 2020, 4.5 billion, it's not really been stable. It's kind of like, oscillated up. They had their ups and downs, but pretty solid stock. They've always paid dividend. In terms of return on equity, maybe not so great. Could do better with return on equity, which is one number that I like to look at. But I'm looking at their price at the moment, and based on current information, it looks like that is a stock that has inherent value. It looks like it's slightly undervalued based on the interim numbers that were out earlier in the year, so it could change. I don't know, but this is based off that. And so we'll quickly go to the next stock on my radar. I hope you're taking notes. You're taking notes. Custodian investment. That is one of the, I think about the only insurance company that is listed like a group. They like have a lot of, assets, a lot of subsidiaries under them. So it's not just your ordinary insurance company. It's an insurance company that has a wide range of investment portfolios. And so that makes it one of the largest insurance companies on the exchange, if not the largest. And current share price is 9 naira 7 kobo per share. And price to earnings ratio is 3.8x, so cheaper than ICO and slightly more expensive than AXA Mansard. It has been as high as 10 naira 85 kobo before. That's the share high, price high, and price low 8 naira, 52-week low 6 naira. So it's gained over the last few months, and so maybe there's not a lot of upside. But if you look at the interim results as well, they said they were likely going to do 16 billion in profit compared to 1.5, which was a 44% rise from the year before. And so if you look at those numbers and you look at the earnings per share, and assuming they even make those sort of numbers, I see a modest upside here, maybe 10 to 15% upside based on the current share price. So maybe, just about that. And the last one is NEM Insurance. So NEM Insurance, current share price 7 naira 65 kobo. I beg your pardon. Price to earnings ratio, wait for it, just 2x. Now this is one of my favorite insurance stocks. I've been buying the stock since it was 1 naira something, like years ago. So I buy and sell and buy and sell and buy and sell. That's usually been my MO. I've not had it for a while, but it popped on my radar when I saw the earnings per share. And when I saw the price to earnings multiple, which is just 2x. It's been as high as 10 naira this year and as low as 5 naira 50 kobo. Based on its interim result, it's saying that its earnings per share could be 3 naira 69 kobo. So it gives you an indication of how cheap I think this stock is. I kind of think it's cheap at the moment, and so has an upside of between 20 and 30%. That's my take. I think has an upside of between 20 and 30%. So if I was to be put on the spot, buy, sell, or hold, what will I take? So buy, sell, or hold for me, if I look at ICO insurance, I think for me, if I was going to make a decision, not for you, I'm making a decision for myself, I think it's going to be a buy for ICO. For AXA Mansard, likely also going to be a buy, cautious buy. Custodian, I think, is a hold for me for now. Certain things I want to see. Let's see their Q1 numbers out. Then we could make a decision whether it switches to a buy. But it kind of like is tilting a bit more towards a buy. But for now, it's a hold. And then lastly, NEM Insurance, obvious buy for me as well. So that's it for stocks on my radar. I'm going to be launching our newsletters very soon, Stocks Alert newsletter. If you're someone who subscribed before, that's where we really dish out a bit more insight into stocks and our stock picks and stocks on our radar. It's a subscription-based service brought to you by Nairametrics. Likely going to launch the third quarter of the year, second half of the year. We're going to launch that. So that is Follow the Money for the week. I hope you enjoyed this week's session. Next week, we're going to try and bring you another guest so that we can have better insights as well, or more insights into matters of the economy as well. Follow us across all platforms at Nairametrics. If you miss any part of this show, don't feel bad. There's a podcast version that's going to be out in the next few hours. So just check anywhere you listen to your podcast and you can listen to this show again and the previous show. Drop us a comment on any of the social media profiles. And of course, don't forget to follow us on our WhatsApp channel, official WhatsApp channel. Just go to your WhatsApp and search for @Nairametrics and you'll find it. We do drop updates there. That is me signing out for this week. Ugodre, do have a profitable week ahead. Goodbye.